It's tax time, and you need to know about tax deductions for homeowners. It is tax season. I had a meeting with my accountant yesterday. I had a meeting with my bookkeeper today. I have not washed my hair in a very, very long time. I feel a little overwhelmed. I'm sure you do too. It is the same every year at this time. So I really wanted to sit down and kind of take a minute to talk to homeowners and what they can do when it comes to tax deductions, because you can itemize out some tax deductions, or you can use the standard tax deduction. It's going to depend on which works best for you, but it could save you thousands of dollars. The IRS does have standard deductions for all tax filers, and then you also have the opportunity as a homeowner to itemize and break down some deductions. Now, you can't have both, so what you want to do is you want to determine, you want to get everything, all your ducks in a row, and itemize out which deductions you can actually use or benefit from, and weigh that out against what the standard deduction would be for you from the IRS already. Which is larger, you go with a larger number. But just to kind of give you an idea, from the IRS, you can file as a single person, or you can file as a married person, but you can still file separately. Married couples can also file jointly. That's where you're going to get your biggest standard tax deduction. And then there's also a head of household tax deduction that is standard from the IRS. Again, what you want to do, if you have the opportunity there, you itemize out all the tax deductions that you can actually benefit from, and again, weigh it against that standard deduction from the IRS. Okay, there are 8 tax deductions for homeowners, and there are very specific rules from the IRS for these deductions. So when you're looking at a deduction, you better make sure you qualify for it, because if there is a red flag raised to the IRS, they are going to dig in and come at you with lots of questions, and you could possibly, mess things up a little bit for yourself. So again, look at these itemized deductions. Can you really qualify, and is it really beneficial for you? But either way, there's 8 deductions for homeowners, and we are going to talk about them in no particular order. Number 1, you have your mortgage interest deduction, which is probably one of the most common ones that people know about and take advantage of. If you are filing as a single filer or married filing jointly, you can deduct up to $750,000 depending on what you qualify for. If you are married and filing separately, it is going to be a little less. I don't know why they put that stipulation or rule on there for that, but they do. So anyways, your mortgage interest tax deduction for homeowners is probably the most common one around. A second deduction is on a home equity loan or a home equity line of credit. And just to kind of give you a quick explanation of what that is, it's you have equity in your home, you've gone to the bank, you've gotten a loan or a line of credit based on the equity that you have in the home, and you do have to pay interest on that. So that interest that you are paying can also be a deduction. There is a stipulation, whatever interest you're deducting based on that line of credit or loan has the whatever money you put used. So money used, interest paid, the money that was used has to be on some sort of improvement to the home. Third option for a homeowner tax deduction would be for any discount points you may have purchased when you were getting your mortgage initially or originally. And if you don't know what that means, or you didn't do that, essentially you can buy down your interest rate with discount points up to 1% of the cost of the mortgage or loan. So when it comes time for taxes and, itemizing out all those tax deductions, you can absolutely put in the cost of the discount point. It has to be a discount point. It has to be something that you paid for. It cannot be a loan origination point, because those are free from the lender to the borrower. So that wouldn't count for you on your tax deduction. Fourth tax deduction for homeowners is going to be your property taxes, which is another one that a lot of people know about and are familiar with. You're going to get taxed at a state and local level. So definitely make sure you add that one into your itemized deductions when you're comparing the standard deduction versus what you might be able to get through those itemized list of deductions, which is going to be higher or lower. A fifth tax deduction for homeowners could be any necessary home improvements. This is where it can get a little gray, and you want to be careful, because if you have a fully functioning kitchen or bathroom and you go in and redo it, this is probably not going to qualify. However, if you have someone living in your home with a disability and you need to make your home a little bit more functional for that person, then those necessary home improvements could qualify for that tax deduction. Again, this is where it gets a little gray. You want to be careful. You don't want to raise any red flags for the IRS. They will come and audit you. Just be careful with this one. A sixth tax deduction for homeowners is going to be a home office. Again, this is where it gets a little gray, can raise red flags. When my husband and I first started our business, we worked from home and we never used that as a tax deduction because we didn't want to raise any red flags. Now, it can be different for some people, but basically what you want to keep in mind is that if you have a home office, it has to be your sole office, sole space, whatever it is that you're doing. You can't be like sometimes or when you're just working for home. It has to be your space that you're using to run your business. And again, I would be very careful. There's going to be lots of gray areas, but it can be one of those itemized tax deductions. Just talk to the professionals and let them help you on these more gray area itemized deductions. A seventh tax deduction for homeowners is going to be your mortgage insurance. Now, sometimes when a buyer goes and gets, or a borrower goes to a bank and gets a loan, the institution wants a little bit of extra protection, so they may charge you a PMI, which is mortgage insurance, and that can also be a tax deduction for homeowners. The eighth tax deduction for homeowners is going to be your capital gains, which is probably the most popular, the most well known, and the most taken advantage of. When you sell your home, whatever you paid for it originally and then what you sell it for, that difference is what you can use for a tax deduction. So again, there are some rules centered around this tax deduction. I'm going to throw them up on the screen. Again, talk to the professionals, make sure you're doing it right, make sure you're following all the rules and crossing your T's and dotting your I's, because you do not want to raise a red flag with the IRS. Don't do it. There are so many advantages to being a homeowner. Number one, obviously, you are making a payment towards an investment. Overall, that's the biggest benefit. But when tax season comes along, there are a lot of deductions or benefits that you can get from being a homeowner, which we've just covered. So again, in a nutshell, like I said in the beginning, the IRS is going to give you those standard deductions. However, based on what you've got going on with your home, your mortgage, make that itemized list and check and see which one's going to benefit you more and go with that. Myself and my husband do not like to cause any trouble with the IRS, so when it comes to those gray area deductions, be very careful. I really hope this video was helpful. It was actually helpful for me to make it. It is tax season. I'm going crazy over here. I hope you're not going crazy. I'll be glad when it's all said and done. But again, I hope this was helpful, and we will see you again next Thursday. Bye.